Welcome, guys, to another episode of Buy and Hold. I'm your host, Thick Teddy, and today we're talking about gold. Gold is a lot different than everything I've talked about on this series before. Gold is a physical asset. You can buy it via ETFs, you can buy it via stocks and stuff, but it is at its base a physical asset. So, going to be a little different video today, but before we get started, I want to say, guys, these videos are so fun to make. I enjoy making them. I enjoy, analyzing stuff. I enjoy making sure that you guys have the right idea of companies, stocks, investments, all that sort of stuff before you make the decision. So if these help you, then drop a like on this video, comment below a company you want to see me talk about, subscribe to the channel, all that sort of stuff. But this is a video about gold, so let's start off. I got the gold bowl here right next to me. I got this a while ago. It's not actually gold, obviously. This would be outrageous, absolutely nuts. But this is my gold bull, and we're gonna figure out if gold itself is bullish today or if it's bearish. So, is it worth a buy and a hold? Who knows? So let's find out. This is the chart. I have the yearly chart up here. Don't mistake it for the daily, the weekly, the monthly, anything. This is the yearly chart. It looks pretty interesting here. You can see it's all the way back to 1967 here, 1961. We can even go back further if we wanted to, but I'm gonna keep an eye on this modern era. I guess that's the right. Whoa, look at 1997. That's pretty crazy. I haven't even looked into what happened there, but you guys can see the volume there. Holy moly! But let's get some levels drawn for gold and figure out, if I was to be a person who'd be looking to buy this, where would I want to buy? And this is in ounces, price per ounce. So this is the price of physical gold. We're going to talk about some of those ETFs later that you could be thinking about buying, but let's start off with just this price per ounce. So I think a pretty key area here that can be easy for everyone to start with is this $1,675 range. And why is that important? Because in 2012 and 2013, it was a pretty common area. The candle in 2012 closed in that exact line. And then the high of 2013 was also that exact level. And then in 2021, the bottom of that candle wick was that exact same level. So we have 3 touches of that on a yearly chart, which makes it a pretty significant level. Another level I could have here, I think, is pretty simple, is this pretty much 1800 level. So in 2012, that was the top of the wick, and then in 2021, 2022, it touched that level and ended up closing that yearly candle above that 1800 level. So that 1800 level has been pretty, I guess, significant and caused a lot of bounces in the past 2 years. And obviously, we're pretty early into 2023, so this 2023 candle isn't, something I want to look too far into, but so far it's popped up and then it's gotten rejected, so we are getting a little bit of a pullback on this yearly candle after the hot beginning. And then let's look at some resistances here. There's a pretty heavy resistance area in this $2,075 range. The 2020 candle topped there, and then also the 2022 candle topped there. So if you're looking to be a person who buys and sells around the core, then you could buy in these levels and you could sell up here in this level. Let's get to the monthly so that we can just look at some more levels here. You can see how our levels have worked out in the monthly as well as the yearly. The 2011, 2012 level, it's pretty clear, and then also this 2021, 2022 levels. They've worked out really well. So let's get a few more levels in here before we move on. I think a pretty good one would be this 1450 level. I don't expect to see that. Honestly, I don't think we're going to see that on gold. But if we do, I'd be willing to fill the boat pretty heavily there. And then there's one more here. It's this level here where we're getting quite a bit of touches, and that is right about 1560. So 1560 we had a touch in 2011, 2012, 2013, and then again in 2019, and then again in 2020. So a lot of touches there. So this is kind of my overlook of the levels I would buy if I was someone who wanted to be long on gold. I would have this 1790-ish, this 1800 level mapped out as the first one. That's only $75 below where we're at right now. After that, I would have 1680 mapped out. After that, I would have 1560 mapped out, and then 1450. Those would be the 4 levels I would have as buy levels. And I'd probably watch this if I was even going to invest in an ETF. I'd watch the price of gold per ounce and use that to largely invest in those ETFs, because those ETFs, again, we're going to talk about the pros and the cons at the end of this video. Those ETFs, they'll move a little bit different, but they're based on the price per ounce of gold. We need to talk about why gold has been valuable, because everyone can talk about gold. I want silver. I love these physical assets. But a lot of people don't really understand why. They don't understand why we want those, why they've been valuable forever, and it goes back really, really far. And this is just from Investopedia. So it says, beginning with ancient civilization, from Egyptians to the Inca, gold has held a special place of actual and symbolic value for humanity. Gold has been used as money for exchange, as a store of value, and as valuable jewelry and other artifacts. And then I'm going to skip this third one for now, and I'm going to talk about this fourth one. Gold's lustrous and metallic qualities, its relative scarcity, and the difficulty of extraction have only added to the perception of gold as a valuable commodity. So the big part I want to touch on there is its relative scarcity. So for the most part, gold is pretty scarce. It's not, commonly found. It's something that, they have to set up operations to find, but it's not so scarce that it can't be used as a trading currency. So it can be found and it can be distributed, and people can get it. Normal people can get it. It's not something that only the rich of the crop have. It's not something that normal folk can't get their hands on because it's so scarce. So it has this perfect level of difficulty to find, difficulty to extract, difficulty to get your hands on, and ease of getting your hands on it. There's some balance in the middle there that gold just hits perfectly, and it has since the beginning of humanity. As soon as we were advanced enough to find trading posts and trade products for valuables, gold was kind of the baseline. Gold was what we used, and to this day, gold is still used as a pretty valuable substance. So I just wanted to talk about that scarcity, because a lot of people, they don't understand that gold is not, so it's not valuable because it's the most scarce. It's valuable because it's right in the perfect area to where people can get their hands on it. But it's not like aluminum where everyone can get their hands on it, for whatever price, for whatever, people are throwing it out their back door. It's not like that. It is scarce, but it's not overly scarce. And then this third one says, gold's value is ultimately a social construction. It is valuable because we all agree it has been and will be in the future. And that's something that takes a bit to wrap your head around. Gold is valuable because we make it valuable. It's basically supply and demand. We demand gold as a valuable asset. People want gold because they believe it to be valuable, so therefore it is valuable. It's a simple but very, very complex kind of paradigm at the exact same time. It's weird. It's kind of an odd thing to get into your mind that it's only valuable because we make it valuable. So if people were to drop gold, then there'd be something crazy, but I don't expect that to happen. So let's move on to kind of the catalysts of gold that we can look forward to for the next few years and or the next few decades. So this first article I'm going to show you, I'm not going to read anything out of it, but Ghana plans to buy oil with gold instead of US dollars. That's an interesting shift in what we've seen, predominantly in the past. It's usually been US dollars for gold has been basically the baseline for a long time. But so Ghana changing that, and that was on November 24th, 2022 is when this article is from. Changing that is kind of, interesting for the US dollar. Moving away from the US dollar for such large orders, such large trading, is not something that we want to see if you're a US dollar backer. The good news is for gold is kind of inverse the US dollar. It's not exactly, and it doesn't always work out that way. But for the most part, if US dollar is strong, gold is usually weak. And if gold is weak, US dollar is strong. So let's read this here. Actually, let's go to this next. So this is the chart from 2008 to 2022. The gold line is gold and the blue line is the US dollar. You can kind of see what I'm talking about there. US dollar is weak to start 2008. And gold is strong to start 2008, and then, the US dollar starts to strengthen here, and gold weakens. And then you see the US dollar start to tank here all the way into 2011, and gold is running all the way in that same exact period. US dollar reverses down here and starts to increase, gold starts to decrease. So it's largely been a bit of inverse. You can see there's just some chop area here. There's a little bit of weird, there's a weird time in 2020. We were wearing masks. We were basically running around thinking that we were in the zombie apocalypse, but also gold and the US dollar were both running. So not only were we basically buying toilet paper and filling up our entire spare bedrooms full of toilet paper, the US dollar and gold were both running at the same time. Odd. But now we're kind of getting back into the normal swing of things. So gold has been declining for most of 2022. The US dollar was increasing. And then to end 2022, the US dollar took a hefty dump and gold increased pretty quickly on that little dump that we saw. And that's also to start 2023. So then let's move on to, has the US dollar peaked? And just, this is an interesting article that I read about why the US dollar might be having some downside in the future. And let's read about it. So US interest rates have fallen sharply in the past few months, but are still high relative to those in most other major countries, thanks to the Federal Reserve's aggressive rate hiking policy. In general, developed market countries with higher interest rates tend to have stronger currencies because investors earn higher returns. All else being equal, higher interest rates tend to make a currency more attractive to hold and more expensive to short because the investor who is short the currency has to pay the difference in interest rates. The dollar's recent pullback reflects a change in market expectations for the path and size of the Fed rate hikes. After discounting a federal funds rate of 5% to 5.25, the market is now pricing in a peak closer to 4.9 and rate cuts later in the year. Meanwhile, Europe and the UK are expected to continue hiking rates. Even the Bank of Japan is allowing its bond yields to rise modestly. As a result, the gap between U.S. yields and those in other major countries has fallen from about 2.4 to 1.7 based on the Bloomberg U.S. and Global X USD aggregate bond indexes. So essentially what this is saying is it is good for the U.S. to be rate hiking continually. It's good for the US dollar for the rate hikes to continue. And so the US dollar has priced in the fact that the Fed is slowing those rate hikes, likely to pause, and then likely to begin to decline. It's pricing that in comparative to other countries who are going to continue to raise their rates. And when they raise their rates, which is good for their currency, it's bad for us if we continue to, cut our rates, or if we, actually I said continue, if we flip to cutting our rates, or if we pause, because, it's better for the currencies if you're continually raising your rates or having them higher comparative to other developed countries. And ours right now are high, and they're also relatively high, but that gap is going to start to kind of narrow. That's actually what it says right here. The gap between U.S. yields and those in other major countries has narrowed. So that's essentially the reason for this U.S. dollar decline that we've seen to end 2022 and to begin 2023. We were strong with those high rates, and then other countries kept going, and we're slowing down is essentially it. And that's good for gold because as the US dollar starts to weaken, which if they continue, other countries continue to raise rates. My goodness, it feels like I'm saying Peter Piper picked a pepper in a peppered patch or whatever. If other countries continue to raise rates and the US, pauses and then starts to decline, that gap is going to continue to narrow. The US dollar is probably going to fall, and gold is likely to start to move. But that's also only a year or two out. That's only a year or two of the kind of the future. So I think gold also has the potential to be something longer term for you guys. It's, if we go back to this monthly and we move it to the yearly, you guys can see the moves that this thing has had. If you were to have this since 2000, you would have bought it at $265 and it's at $1,800. So you have a lot of really, really, ample time to just be in this and just allow it to move and develop. I did have one more thing I wanted to talk to you guys about, which is essentially Russia possibly being able to manipulate the gold prices in their favor using oil. So this is a really, really interesting article, and it was also from someone It was a Credit Suisse or Credit Suisse, I don't know, financial analyst who talked about this. And I'm going to read through it for you guys. And then we're going to talk about the pros and the cons of ETFs versus physical. And then I'll get you guys out of here. So it wasn't that long ago that we were buying record amounts of Russian oil and petroleum products in exchange for dollars until earlier this year. Today, an increasing number of nations are discussing trading oil for gold, such as Ghana, which we looked at earlier. But there's an increasing dynamic at play that could ramp up this trend in ways that U.S. policymakers might not be ready for. The United States is trying to simultaneously cap the price of Russian oil at $60 while also sanctioning Russian gold reserves to prevent others from accepting Russian gold as payment for goods and services. This plan is spelled out in the National Defense Authorization Bill for 2023, but Credit Suisse financial analyst Zoltan Polzar believes this plan could backfire, sending gold higher and the dollar lower. All right, this next part is a really interesting theory. Polzar explains that limiting the price of Russian oil to $60 a barrel pegs gold to oil at the rate of 1 gram of gold per barrel of oil at current gold prices. But the sanctions do not prevent Russia from exporting gold, only from using their own gold to purchase other goods and services. Russia could easily exchange a barrel of oil for a gram of gold, thereby increasing their gold reserves, but they could also offer to trade 2 barrels of oil for 1 gram of gold, thereby doubling the price of gold in dollar terms. This would allow Russia to continue to profit from the oil trade while vastly increasing the value of their gold reserves. For those of us who live in the dollar-centric world of the United States, it would also increase the value of our gold holdings and vaulted reserves. That is an absolutely nuts theory, but Russia. Think about Russia. Think about who runs Russia. Think about the moves that they're making. Think about who they want to fuck over, and it would make sense. It's not out of the cards for them to do that exact move where they would accept 2 barrels of oil for 1 gram of gold and essentially possibly double the price of gold instantly. Just think about what that would do. Russia, decide to basically say the value of gold is double what it is now based on these oil prices, based on how much we're going to be accepting for oil. So then, what would your gold investment do? Your gold investment would probably follow that exact move. Russia would be saying, all right, we're going to basically double our value of the gold that we're holding, which Russia holds a absolute crap ton of gold. Let's just look that up real quick. How much gold does Russia have? Yeah, you guys can see here just how much gold they have. Absolutely nuts. Absolutely nuts. So it makes sense for them to want to basically increase the value of gold, and they have a direct route to doing it. So if Russia decides to take that, then you'd be seeing your gold basically running like a penny stock. it would be absolutely nuts. But let's talk about the value of investing in an ETF versus the value of physical gold. So ETF, I have some notes here. An ETF is easier to sell or buy, obviously, because physical gold you have to take to a place. You have to make sure that you store it correctly, make sure that it's in good condition. In ETFs, you can just click buy, sell. You can click a number that you want. You can buy it. You can sell it basically on demand. The ETFs usually move a little bit more than physical gold. Physical gold has always been what people have wanted to be more stagnant. They've wanted it to be an easier. I'm going to move back to the chart for this. Let's just remove these drawings here. And let's just look at the chart. Physical gold has always been a little bit more flat than these ETFs. These ETFs move a little bit more. They yield a little more gains. They yield a little bit more losses. So a little bit more risk, a little bit more reward on these ETFs. The other benefit of these ETFs is you can buy a smaller amount. You could buy, a fraction of a share. You could, if you have a $500 account, you could just buy $100 worth of this ETF. For gold, it's a little bit more difficult to buy that small of an amount. And then the other kind of, negative of these ETFs is gold is largely a bet against the financial system, and ETFs are a part of that system. So a lot of people think gold is a great bet if there were to be a collapse, if there were to be something absolutely crazy. These ETFs are tied in with your brokerage. They're tied in with banks, all that sort of stuff, which is a part of that financial system that gold is essentially a bet or a hedge against. Physical gold, there's no ties to the financial system. You can have your gold. Obviously, there's going to be nuances inside of what the financial system does that impact physical gold. But, for the most part, if something terrible were to happen, or to the financial system, then physical gold would keep itself basically having value. It would still hold value rather than if someone goes belly up and you're involved and you have something on that site, or you have your ETFs are bought on a brokerage that something terrible happens, then you might be in a completely different situation. Physical gold has a little less returns. They move slower. It's more stable, like I was saying earlier. And the other thing about physical gold is just the safety of a physical asset. So some people really like the feeling of having a vault of gold, knowing that if shit went down, they would have gold. They would have gold coins. They would have all this sorts of stuff. They just feel a little bit better about that, and it kind of ties back to gold being a bet against the financial system. I've said that about 8 times now, but that's essentially what it is. So I hope you guys see kind of that I think gold is a good buy and hold. Basically, moving forward for the next few years, there's some good opportunities for catalysts to come out, with Russia, with other countries, with the US dollar, with our rate hikes seeming to pause soon, or possibly even transitioning into rate cuts. I think the US dollar is probably a little bit weak and gold might be a little bit stronger. So I think it's a good buy and hold. I think you might need to find a dip, 1800, and then those other levels we mentioned at the beginning of the video. But for me, it's a good buy and hold. I hope you guys got some good info from this video. Please drop a like. My cat came to say hi at the end. I'll show you guys him. Here's little buddy. Say hi, everybody. Well, he didn't say anything, but yeah, thank you guys. I'll catch you guys next week on another buy and hold video.